Awesome. So I had a bunch of questions from people in my inbox that had loads of different questions. I kind of just narrowed it down because there was quite a lot of repetitive questions, but I had quite a few. So first one was, what do you think are the qualities that make a good trader? Personally, I would say that it's consistency. The fact that you're doing something enough, and not just the effort, but you're working towards something, so you're compounding the amount of things that you're doing that are going to get you there. For example, you're waking up every morning doing your morning routine, that's one. Then you're analyzing the markets, that's two. You're working on improving, so you're watching maybe some content from one of your trading courses, or you're refining your strategy, just kind of keeping your tools sharp and approaching the market in a very disciplined way. So for me, I would say the main qualities is working on your psychology, your consistency to do something, and the discipline for you to follow that through. And I think that's what makes a good trader. The next question was, what was the best trade you ever made? The best trade I ever made. To be honest, I don't think there is a best trade. I think there's been very good trades, and there's been trades I've taken in the exact same way that have just not worked out. It's just probabilities, my sense. So I don't think I could really say there was a best trade, but I would say that there's definitely been some trades that, smack you in the face. They have so many positive confluences and maybe one or two negatives, but the positives weigh out the negatives. So for that reason, it's been the best trade. It's difficult to really say a best trade in my opinion, because you can't define one trade better than another. You might take two trades exactly the same confluences, set up two different pairs, and then, or even the same pair, and then one plays out and one doesn't. So at the end of the day, it's probabilities, but I think what makes the best trade is probably just the confluences stacking up in your favor and having more pros than cons. What was the riskiest trading decision you ever made? What happened? I think the riskiest trading decision I ever made was probably when I didn't really know anything about risk management. So I would probably risk 20%, 10% on a trade, maybe even more sometimes, and obviously what happened was it resulted in me losing and then leaving with a very, very bad feeling. Those were the worst decisions I made. Obviously, this is before I kind of understood risk management, before I understood how to position myself properly in the market, what I'm being patient for. I was kind of just approaching the market and, just going off what I thought was how trading worked. But once I actually understood how the markets actually functions and moves, that's when it all made sense, and that's why risk management was so important. What strategies do you use to evaluate risk? To be honest, I only trade price action, so I trade market structures. So I guess in terms of evaluating risk, it kind of just boils down to, um, is this position in a higher probability or a lower probability area? If it's in a higher probability area, I may opt in to increase the risk by ever so slightly, not going over 1%, because I do trade below 1%. But working within a scale of higher risk and lower risk. It also depends on a lot of confluences. But essentially, if it's kind of further down in the trade, and it's obviously would definitely have to be a 3-to-1 for me, but it's got, let's say, a 12-to-1 on the table, and it's a little bit more riskier, then I probably would opt in for less risk. So it really just depends on understanding market direction, exhaustion, profit, sort of where I would take my profits out, essentially. So evaluating where the market will be going and where it could potentially pull back aggressively, and then trading from there. What strategies do you use to identify trading opportunities? I guess once again, it's just price action. I think if you look hard enough and you identify patterns, and you trade patterns, then you'll kind of know that there's opportunities in everything, really. You just have to be patient enough to wait for these patterns to form, and then once the patterns have formed, you can take advantage of them. So really and truly, pattern recognition. Just get familiarized with patterns. Have a look at loads of different patterns: ascendings, descendings, channels, flags, pennants, all of them, wedges. Once you understand how these patterns work, in which areas they work in expandings, you're going to be able to apply them to your trading, and you're going to be able to actually capitalize a lot better than most traders, because you actually understand how patterns work, but not only how to trade the pattern, but where the patterns matter. That's the most important thing about these patterns. So that's basically how I identify trading opportunities, by understanding the patterns and where they matter most. Do you specialize in any particular currency pair? To be honest, no. I did backtest a lot of different pairs when I was training and learning. I would say that over time you get used to trading so many pairs. You can definitely, and I know traders that trade 1 or 2 pairs, for example gold, and they just trade gold purely and Euro USD, for example, and they make money. But to be honest, I kind of made it a ongoing effort to make sure that I was quite universal, and I had the ability to trade pretty much all of the major forex pairs. So I don't really trade a lot of exotic pairs, but I have looked at Singapore dollar and so forth, ZAR, but I'm more interested in trading like GBP USD, the yen pairs, euro pairs, GBP pairs, US pairs, kind of just working with them, their correlations, what's happening with the DXY, and then, just kind of trading off that. So there's more than enough instruments to make money from, but I think once you have an edge and you can apply your edge to maybe, let's say, 15-20 pairs, that's more than enough. Obviously, you're not going to be trading 20 pairs a day, a week, but it's good to kind of go through your preparation and whatnot. So I think in terms of being a good trader, you definitely should diversify your investments, but you can still make a lot of money from just trading one thing. What type of risk management systems do you use to protect your trading account? That's a good question. I actually don't even know how to answer that. What type of risk management systems? I don't think I have any systems, but I kind of just developed a aggressive / semi-aggressive risk management system, in a sense, if that's what it's called. Basically, I kind of protect myself above and below market structures. So if we're in a downtrend and we had a market structure and we've moved away aggressively, I would then perhaps maybe, up to discretion of the pair characteristics, lock in my profit aggressively depending on where price is. So I may just put it just under or above the previous structure that it just moved from, and then if it's impulsed aggressively, I may then get a little bit more aggressive with my my stop placement, or I might wait for the next structure to form and then be aggressive in that area. So it kind of just depends on the structures and then trading from there. So pretty much just look at market structures and try trade from the market structures. What is your approach to setting stop loss and take profit orders? I'll be very honest with you, I rarely use orders. I'm somebody who sets alerts now. I'll set my alert. My alert will kind of indicate, okay, you need to be looking at this chart today or in the next hour or two. Something is going to be happening. So depending on what I'll be trading, depending on how the trade is developing, then I will then evaluate if I'll be, how I'll be taking the trade. The stop loss kind of can come in a little bit sooner. I'll have an estimation what sort of stop loss, maybe 23, 24, and then if there's an ability to refine it, I'll go as low as 10 pips. Take profit orders, not really. Take profit, I would just set it for a reference, but I more so get taken out of the position from my stop loss, and I always do. So I move my stop loss aggressively. I don't really ever use a stop loss, take profit. I only use a stop loss and then let the stop loss kind of just lock in profits, because many times, and you might have experienced this as well, is the profit target is here and then price is getting to that point, and then as you do it, you're like, okay, you know what, let me take profit, and then you manually close it and it continues going. All you would have had to do is maybe lock in your stop loss just above that price by a few pips, and then if price carried on going, you can just aggressively move with it and lock in maybe another couple percent. So I learned from that, and I kind of just prefer to be more aggressive with my management, opposed to actually having a take profit on there. But if I'm going to be away from the screens, then a take profit would definitely be put on board, but it really just depends. But most probably the stop loss would be the one. Do you prefer to trade on the long or the short side? To be honest, I do like shorts. It depends on the pair, to be honest. Like New Zealand pairs, very nice shorts, aggressive sells. I think it just depends on pair characteristics. Like New Zealand pairs, sometimes the buy is good, sometimes the sell is good as well. I mean, just they act differently. We know that sells can be aggressive, and you see these huge sell candles, which is nice to be on, but the majority of the time we're not in on them, and when we are on them, it's great, but you're just so aggressive with management, and most of the time you don't really get that full run. So it's one of those ones. I mean, I prefer both. I do prefer the short, obviously. I think most people do, because the profit is kind of made a lot faster, but the anticipation for waiting is a lot longer. Hence the reason for the long is sometimes a little bit better, because you might be in it for days, if not weeks, but you're locking in profit consistently, because you'll see these small but progressive candles, which sometimes moves a lot better. But then when you do get the short, what may have taken 2, 3, 4 weeks could happen in a day. So that's something that's pretty nice. So yeah, I guess it's a really difficult question as well. Can't really say that I like longs or shorts more, but I think if I actually had to really decide, most probably I would go with a long, to be honest. Even though the short is very nice and money's made fast, the long is more sustainable and there's more room for scale. Whereas an aggressive selling momentum, you'd actually make less money, in my opinion, because with the long you can keep scaling and adding in and adding in and adding in, and your position size grows and you're locking in more profit. Whereas with the short, you probably get one position and it just goes, and then that's it, the trade's over. So yeah. What type of financial news events do you follow, and how do they impact your trading? Okay, that's interesting, because for quite a while before I actually implemented this in my trading plan, I didn't have a clue. So things like low liquidity, big elections, geopolitical events, and basically any stuff that can be priced in the market. Anything that can be priced in the market and cause a volatile spike or movement, that's what I'll be looking at in the market. So geopolitical events, big elections, and low liquidity, those are the things that I'll look at. I've literally got it in front of me on my trading strategy. I don't know them like the back of my hand, but every day I basically know what news is coming out for the week. So for the pairs I'll be looking at, I would basically map out on Sunday when I do my Sunday market breakdown, and then I put my weekly forecast in. I'll have as a template, which I use for every day's new forecast for my daily watch, I'll have what news events are coming out. So for example, Tuesday this week for Aussie, we had NBA business confidence, which was at 30 past in the morning, and basically that could cause some volatility. So if I have a position open overnight, then I'm aware that I'm not only dealing with high spreads, I'm also dealing with potential potential volatility coming in early morning when I'm sleeping as well. So these are just things that can kind of help you out. 1:30 on Thursday, got GDP growth rate for US dollar and durable good orders. What they actually are means nothing to me. Just the fact that they're high impact and can cause some volatility. It doesn't mean that I would stay out of the trade. It means that terms of impacting my trading decision, I would say that it just means that I would be more aware that if there's volatility, we could move to the next price point. For example, if I have override 1 and 2 to the second override, or for example, we might complete a price pattern and then just continue going with the aggression off the momentum off the news. So piggybacking off the news to create that momentum to give me that volatility for that move that I'm looking for, which would work in line with the analysis. But many times news has worked against me. So, I don't trade the news. I'm just aware that volatility is coming into the market or could come into the market. Once again, I just carry on trading the way I do because when I backtest, I don't follow the news, which is very interesting. But I am somebody who does like to be aware of these things just because if it happens, I don't want it to affect my mindset too much. So if I do map these things out predetermined and I'm like, okay, cool, price is here, it needs to get to this point. There's some volatility coming in the market in about an hour from now. Could this cause enough volatility for price to get there? And then we might see maybe a retrace or something in that area. So these are the sort of things that I'll kind of map out and just add it into my forecast as I'm waiting for something. So yeah, I think that kind of summarizes a good number of questions. I did have quite a lot more. I think some of these were repetitive, so I do apologize if I didn't get to answer all your questions. But yeah, these are pretty good. So yeah, thank you for sending them in. If you have more questions, feel free to drop them in my inbox. And yeah, have a good week. Have a good trading week.